Destroys the blades. Anything you cut anything wet with a blade, and you're just wrecking the blade.
I have to remember that because I don't think about that when I cut my little bushes. I guess the trimmer would be the same problem.
Yeah, it might not matter as much with a trimmer, but it does matter. Water is hell on cutting.
Good morning.
Good morning.
Good
Morning,
morning.
George.
Yeah, I'm just getting rid of these bots while we're just getting ready.
Those bots, they show up everywhere I go where Mark is, the bots show up.
Bring them with me.
He's a
Can't be
bot
everywhere.
magnet.
I have my bots do all my work.
Oh, yeah, let's talk about that.
Like
But anyway,
Buffett.
so we're going to record this, and we kind of waiting for a couple other people to get on. I think Keith's going to join us, Wilcox, and some other
Yeah, I
folks.
see Keith. He's arrived.
So I mean, we can start up because I mean, we
Everyone's
all have
late.
things to do. Hey, there he is. Um, Patty,
Oh,
you,
yes.
so let me just sort of throw this out there. I think we're going to try and touch on a number of little things, and then we'll get into sort of a debt discussion, and that's kind of the main topic. And I wanted to I wanted to make the debt discussion sort of as you know, this is recorded, and what I want to do is take the debt discussion and possibly clip it out and put it as a YouTube video to send to a couple of people that might be interested in what we had to say about the debt. So I'll discuss that a little bit later, but I would say it's time for a market report and see what's going on.
Yeah, gosh. Another scary day in the market. I was surprised that I was going to report slight up in S&P, Nasdaq, and Russell, but that's getting wiped out this morning. So the Dow was down 0.43%, and as of this morning, it was 49,160. Uh, the S&P was up 0.05%, only $3.75 or 75 points. So it just cannot get back to the 7,000. It's at 6,877, and I know it's much farther down this morning because it's down 57 more points. So 6,822. The Nasdaq was up 0.33%. That's 83 points, and I'm given over the past 5 days, just to clarify. So at 24,921, and then the Russell was up 0.36%. So, they're all really small. That was only 9 points. So it's hovering around 2650. And this morning it's at 2640. Gold and silver did very nicely. Silver outperforming. It was up in the past 5 days 2.74%, and it is up again $2 and something cents. So let's see, what is silver? 90.08. That's the silver
Wow.
futures. Gold is above 5,200. I know this morning it's going even higher. 0.36% over the past 5 days. That's just under 19 points. The dollar, thankfully, is a little bit down. It's at 97.734. That's less than 0.2%. And the 10-year, wow, it really plummeted this morning, which I'm guessing, I haven't been
Really?
able to watch TV. Yeah, it's at 3.979, and I bet you it's even lower now. Let me just check while we're talking to see if it went. Oh, yeah, it did go down another tenth of a point. So 3.977. Remember, we've been above 4% for more than a year. So I'm interpreting that as a sign of trouble, which I'll get to in a second. And then WTI, I got to look at it because I had to change it 4 times this morning. Crude oil was just popping up, up, up. Yes, it's up more than $2 just this morning to 67.22, and it was 67.54, which is more than a 3.5% increase. So that's a lot. All right, just on the overall market, Nvidia blew out its earnings. I'm not going to run through the numbers, but it had a 75% growth over the last quarter, and the stock only went up like 2% on Wednesday night, and then yesterday it plummeted more than $10.50. This morning it's down even more than that. It's down three and a half more dollars. So even though it did better than expected, the market did not reward it. The other news is Netflix withdrew its bid from purchasing Warner Brothers Discovery. And so last night the stock popped $9.09. This morning, uh-oh, I don't know. I'm on the wrong screen. I don't know what it's up now. But that means that Paramount is going to purchase WBD. It came in with a better bid, and Warner Brothers Discovery said, "Hey, Netflix, do you want to try to improve your bid?" And they said, "Thanks, but no thanks." And then PPI this morning was reported, and it came in hotter than expected, and that's why the market is down. Yesterday, the Nasdaq was down more than 2%, and it recovered by the end of the day, but it's down 1.2% again today. The Dow Jones is down 1.26, S&P almost 0.9. Wow, and the Russell is down 1.5%. So PPI is showing that we still have inflation. It was hotter than expected. They wanted it to be 0.3%. It came in at 0.5%. Let's see, the core wholesale prices were 0.8%. Food and energy were down, but the metals, like we keep reporting on gold and silver, were up 4.8%. It's almost 5%. So services and prices for metals were up, goods decreased. I'll just leave it at that. And finally, OpenAI closed its 110 billion funding campaign, which is remarkable.
Wow.
Yeah. So that's all I have.
Mm-hmm. Well, this might be a doom and gloom call. So yeah, Patty gets us started off with a big charge there. So thank you. Anybody want to chime in? The gold and silver pricing is interesting. But yeah, you
I
didn't
know we're not supposed
mention.
to give financial advice, but for goodness sake, if you're looking for, oh my gosh, the market is doing so terrible, gold and silver and oil are the only safe havens. I'm just saying that is advice. Yeah. And it's been
Okay.
working since January. Yeah.
All right. So yeah, thank you.
Yeah.
Why don't we shift over to Aaron, and then we'll do a couple of other things. So yeah, Aaron, why don't you go ahead and take it if you want to? Give us a little crypto bleak report there, my friend.
Yeah, hey, good morning. Nothing that great really to report. But I'm watching I think this kind of relief rally in Bitcoin and some of the alts. I think towards the end of the day into the weekend, we may see upwards towards 70, kind of that resistance right around 69 because it was a previous cycle high. So I'm kind of watching that. I think we do see a little bit. I think the market overall. I think it's one of those panic at the beginning, and we'll see where it closes. But that's what the crystal ball says. In Ethereum, it was kind of interesting. Vitalik, which is the founder, he continues to sell. I think he sold like 8 million, 10 million worth of Ethereum yesterday. Continues to offload it. And then he released kind of the paths to fix Ethereum because of the threats of quantum computing on Ethereum's chain. So that was kind of interesting. It was above my pay grade as far as understanding it, but it was kind of interesting. He said, "Hey, we got to fix these issues moving forward," as he sells all his Ethereum too. I
Who
don't
is
know if
he?
he's trying. What's that?
Who is he that you're referring to?
Vitalik Buterin, he's the creator, founder of Ethereum. He's like a 20, probably 6-year-old. Like he
Wow.
looks like an alien. I think he might be an alien, to be honest, but very interesting guy as well.
He
He is rather
originally
And
strange. He's Russian,
Bitcoin,
isn't
and
he?
then he basically
yeah,
the shortcomings of Bitcoin he tried to improve upon by creating Ethereum.
Well,
yeah.
is his selling equal to somebody who, is on the board of Microsoft and they're like, whoa, we better sell? I mean,
It'd be like Bill Gates,
Yeah,
like
it'd be like Jeff
selling.
Bezos, Elon Musk,
Yeah.
some of those guys selling, dumping all their shares.
yikes.
Yeah.
But I mean, he does have, I think, like billions in Ethereum. So I mean, as far as like a percentage of what he has, it's still kind of, I would say, relatively small. But I mean, it definitely impacts the market just fundamentally and technically to put that much
Psychologically, I'd
supply.
say.
Yeah, exactly. Yeah,
But there's an infinite supply of Ethereum, so
Yeah.
correct. Yeah, there's not really a hard cap, and it's tough to. That's always like a debating point, or always has been. But yeah, no, that's yeah, bearish, I would say overall for Ethereum. Um, some of the, I guess not really crypto. I mean, it is underlying, but as far as the AI, with Claude and Anthropic, it's kind of an interesting development. They have an Anthropic rejected the Department of War's most recent offer of, hey, we want to essentially use Claude in these ways, and Anthropic says no, we reject it. But they have until 5 o'clock this afternoon for a final offer. But I think they're just going to reject it, and it's going to be continue to be a major topic. And as that happens, you saw Jack Dorsey, which is the ex Twitter, or sold Twitter, started his new company and laid off, I think it was 40 to 50% of his workforce due to the emerging AI markets. But the severance packages were pretty good from what I read. But still, it's kind of one of those, it may be early, it may not be, but it was a pretty drastic cut. And it's Block.xyz, I think is the company. But yeah,
That's
50,
right.
it was quite a few employees.
Yeah, when
So you're
they
seeing that. Yeah, go ahead.
His
well,
his message is worth looking at.
Yeah,
yeah,
definitely.
the stock was $56 at like 4 o'clock, 3:30 yesterday. And after hours, it popped up to 68. It was a 30% increase when he made that announcement. Pretty
Which
amazing.
I think, yeah, I think it's very rare to a, a CEO to announce that kind of news and see the stock price go up as much as it did, which was interesting.
While
But
we're talking about stocks and crypto, just out of curiosity, has anybody played with this Perplexity AI? Because
Yeah.
I'm on it right now, and it's pretty crazy. It has a whole finance section
Yeah.
where it's just like you can click on different stocks, and it's like giving you updates in real time about what's going on with that stock and why. And then they have like this. Is it? I'm clicking back here. Yeah, it has Ask Buffett. It's like an AI that thinks like Warren Buffett. You haven't done anything with it.
Huh. What's Nancy Pelosi doing?
Yeah, he
yeah,
seems to be making some.
Probably running for her life right now. But yeah, if anyone hasn't been on Perplexity, it seems like it's all of the AI models kind of together to all work. It's a
Mhm.
lot, and it's new, and it's kind of crazy.
Yeah,
Interesting.
they have the best. They have the best search right now by far.
Right.
Yeah, they're about to come out with their own browser. It seems like they're about to have their own internet browser here.
No,
I think it said
they've had
March.
that. They've had that for months. I'm running it right now.
Oh, are you?
So,
Are you?
yeah.
Oh, they're coming out with
Common.
some new feature then that's coming
Are
out
you
in
a
March.
beta tester?
They're doing the desktop control feature. So
Yeah.
they're probably going to be the
That's
leader
what it
in
is.
they're going to be the leader in structured AI stuff. So things like
So,
finance.
so all
the
these
niche
people that are going
markets.
out and buying Mac Minis are wasting their time because I'm about to install a browser that's going to have all that stuff built into it, more or less.
Pretty
No, I
much.
mean if you buy a Mac Mini and run your own LLM and you customize it, you could probably beat Perplexity at a bunch of things, and you have privacy. That's why they're doing that. But you don't need to. If you don't need the speed, you can just buy a really big, fast, probably an AMD,
Mhm.
machine. So it wouldn't, it wouldn't be that hard. Or you can buy some
Well, I think it's
cheap
interesting.
cards.
The predictive market doesn't have perplexity even on the chart. We'll talk about that in a little bit with Mike Green, but anyway,
Well,
I just know that Claude is the overall most accepted, most favorable
Because
AI
it's the
tool.
best
Yeah,
for general purpose
this is
stuff.
for
and that's
predictive
Think
what's
about
markets.
destroying the stock market. Oh my God, Claude, every day with a new press release or announcement. Okay, I just pulled up the Perplexity Finance, and one of the best things it has is a heat map of what's going on real time, so you can see what's
yeah,
up and what's down.
yeah,
Hey, it's
Wow.
going to make my market report obsolete. It has everything that I just
yeah,
reported.
yeah,
Thank you.
We won't lay you off.
Yeah, we use
We'll go
perplexity and
from
score.
that's funny. All
Yeah.
right. Real quickly on that same note, I just wanted to uh, make you aware of a piece called it's written and released a couple of days ago. It got a little activity, some eyeballs on it. It's called the 2028 Global Intelligence Crisis. And let me just read this right quickly. It talks about it's a futuristic piece, and it talks about the what the AI revolution will be doing, and what they're saying is they're looking at currently, and then they go down the road for another 2 years. It says the euphoria was palpable. By October 2026, the S&P 500 flirted with 8,000. The NASDAQ broke 30K. The initial wave of layoffs due to human obsolescence began in early 2026, and they did exactly what layoffs are supposed to. Margins expanded, earnings beat, stocks rallied. Record setting corporate profits were funneled right back into the AI compute. That's one of the paragraphs out of this article. And then it goes on to say what happens with all this layoff and the intellectual properties that's not right. It's the intellect that is being just set aside out of the marketplace to the side and being replaced with AI. So it's kind of a doomsday article, but there's some rebuttals to it as well. But I just thought that was would fit in, and Block fits that exact model that the article talks about. They fired half of the workforce, and the stock went up 30%. Amazing. So anyway,
Well,
yeah,
I think that's
so
just because it's reducing their bottom line
yeah,
cost. Yeah,
sure.
yeah.
just
Layoffs always make stocks go up, right? Because
yeah.
stocks are forward looking and they're leveraged. So you
Mm.
have forward looking leverage pricing, right? And so you say, oh, look, we're going to take a short term hit, and companies do this all the time, but it's not always true. We're going to take a
Uh,
short term hit for a long term gain in lack of spending year over year, and that's always a good trade off, right? Because if you
so
can spend all
you
the money for
should
the next 3 years now and save that for the next 10 years, in 10 years, that will have worked out, all other things being equal, which of course they never
so
are.
the unintended consequences of all this are something that's focused on in this article. So I just kind of throw it out there,
Yeah,
and
it
you know,
it depends. It depends, George, on how you see what AI is doing. A lot of what AI is doing is just consolidating the flood of information that the internet created, right? The other thing that it's doing, especially LLMs, are very unusual because it's an people don't realize it's a new interface for computers because you can actually just talk to them now, and they can actually do like what Perplexity is doing that Jordan was talking about is pretty cool. But the bottom line is you could do that 3 years ago with AI. Like you could just tell the AI, give me the stocks in this, blah, 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 and then maybe with two more prompts, it could give you that the same dashboard that they're doing now. Is that Perplexity's consolidated all that? They're doing this structured thing, which is actually a really good play. So they're going to grab all the niche markets first, but And the reason why Claude's so powerful is because all the techies use Claude Code. And Claude Code can actually do anything. And so you can just tell Claude Code, like, go on my computer and rearrange the
Yes.
files and do this and grab this from the internet and build this. And it actually can do a
So the
fairly
predictive
good
market's
job.
kind of on spot on money. Yeah, they got it.
Right.
Yeah.
But as the industries collapse, all that's going to happen is the mid-tier to low-grade workers are going to go away.
Yeah.
And in software, that's 90% of them. Unfortunately, that's been a problem for a long time. And then all that's going to be left in those markets are the high-grade workers. That's going to hit tech first because tech always hits tech first, right? And then it's going to spread to other industries. And then as people realize, oh, you can't run your ticketing system on AI. I got a buddy his company did that. They're going to get rid of that, especially because it's going to become more expensive, not less, because somebody's got to fund all the debt to build all the data centers that no one's ever going to build. And
there won't be any energy.
It's a mess.
All right. Well, let's do this. Let me just give you a couple of quick updates. I don't have anything on World Liberty Finance right now, so I'm sure they've got things percolating. They still are looking for property with their merger with TAE on fusion reactors and to do some testing. At least it's still on their website that it's out there. I haven't talked to our Department of Commerce Director Lightsey to see if he's interested in bringing that project to South Carolina. But I'm sure he eyes glaze over in a second when I started talking about that. So anyway, no, nothing on that. Then I've got just a couple of little quick things about the State of the Union address. If you tuned into that, if you did, doesn't matter. But there was no mention of China in the State of the Union address at all. And there was also no mention of cryptocurrencies. So take that for what it's worth. And I'm not sure what that's worth. But anyway, there was just no mention of that. But I did want to bring in Mike Green, and we want to just hit the predictive market a little bit because we've been talking about that for the last couple of weeks. And Dimitri's not going to be able to join us, but Mike was going to just maybe highlight a couple of different activities that the predictive market is making a play in. And Mike, you want to just give us, analyze us with a couple of things we might want to watch in the next few days, weeks, or months?
Yes.
Thank you.
So I like Kalshi better than Polymarket. It's a little bit more stable, I believe. So one of the questions is, when will DHS be funded again? So they're saying 63% before April 1st, 2026.
Oh, yeah? That's a month away.
And one of the things I think you should look at is the volume that's here.
Yeah.
So it's $2 million in volume for that market, for that bet.
That's a good point, too. Yeah.
Yeah, that's a good point. So Bitcoin price today at 5 p.m. Eastern Standard Time. And they are showing that it will be, let's see, the biggest prediction, 65,500 or above at, 65,000 or above at 74%.
Oh, yeah? What is it right now? I don't.
65,785.
It's above, but it's above 65,000 at 5 o'clock today. Is that what you're saying, Mike?
Yeah.
So you can spend, and what's the price of a contract? 79 cents?
Yeah, 78 cents.
78 cents. So if you're right, then you get 22 cents profit?
Yeah.
Okay. All right.
Oh my God. It's not worth
Wrong.
it. Goodness.
Yeah. Any more?
Oscar for Best Actor, Timothy Chalamet at 68%. And that has a $1 million volume.
Just $1 million?
6
Anybody know
million.
who that is?
No.
Yeah, it's that cute guy. He's did the ping pong.
He plays Paulo Atreides in the Dune series in the new one.
It says Party Green.
He's that effeminate little French boy.
Oh,
he happens to be BFF of a friend of ours.
Oh, wow. He's so cute.
So glad I've learned so much
Any-
from the call.
Did he do the Shakespeare movie too?
I don't know. I don't follow the movies. I don't know.
Okay, he did the ping pong movie and then the Shakespeare movie.
I think the movie that he's up for is Marty Supreme.
Yeah, that's the ping pong. Mm-hmm.
Oh,
Yeah.
is that-
I mean,
oh.
he was superb in that movie. We did see that. That was pretty amazing.
Mm-hmm.
Hey,
Is
George.
there anybody else in competition with him, Mike?
Yeah. So the other person is Leonardo DiCaprio at 13%.
Oh,
Uh-huh.
okay.
Oh, he also did the Bob Dylan movie recently.
He is running away at a $6 billion volume.
All right, any more? I'm gonna let you go.
Hey, George.
Yeah.
Hey, as far as prediction, before we kind of get off that topic, there was in crypto, there was a Zach XBT. He's this like crypto sleuth that all kinds of companies and people hire him to pretty much find these like cyber criminals. So somebody hired him, like I guess paid him some amount of money to look up some insider trading with this surprise company, which is Axiom, which is a pretty big crypto platform. And he came out with this discovery yesterday, and he announced that, oh, it's going to be this big company. And he announced that it was Axiom. And the prediction markets had on there, and there was a trader that actually made, I think it was, I mean, it was over $250,000. It was over, it was a crazy amount of money, but the amount of money, or the person that they're saying that made that bet was the person that hired Zach XPT. So he already knew it was going to be Axiom, but he hired the guy and then put a giant prediction bet. So when the guy put that out, and the insider trading really wasn't as big as the prediction bet that the guy used the cyber sleuth for. So it was kind of that crypto drama, but it was it's crazy how people are using prediction markets to kind of rig the system in their favor.
That's interesting. Yeah. I guess anything can be fixed, right?
Yep.
All right.
Well, it's volume too. I mean, that's the problem. I mean, so if the volume is higher, I mean, it'll be less, it'll be harder to fix. Understand? I mean, so if you have a volume like $40,000, it's easier to fix. But if you have a volume,
insider trading is insider trading. Like you may make less money, but it's the fix is the same. It might not be worth your time.
Yeah, or the jail time.
There's no law against it.
And any more, Mike? You got one last one before we go to Dennis?
So they're saying that Scotty Scheffler is at 23% chance of winning.
The Masters.
Rob McCrory, is it Rob McCrory or something? 11%.
Rory McIlroy.
Oh, McCrory. Oh, I don't know.
Rory
Do not
McIlroy.
bet against Scotty Scheffler in golf.
Yeah, he
right
chokes
now,
every time. There's no prediction market necessary. He chokes. The only choker bigger than him is Phil Mickelson.
That's his karma for breaking up with his fiance through a text.
There you go.
Okay.
Right. Well, thank you, Mike. I appreciate the exciting update on prediction markets. That's great. All right, Dennis has got a little something he wants to recap and tell us what's on the tap for Monday, March the 2nd, here in Columbia with the Economic Freedom Forum. I guess he's still on the call.
Yeah, he's there.
He is. He's got his mic off. He must.
Yeah, I'm having a little tech problem.
Uh-oh. Are we going to be able to hear you, Dennis?
Whether I can hear you.
Well, I want to hear you.
Pot is all associated with peripherals such as hearing aids that didn't charge overnight properly. So my problem. But if you can hear me, that's all that matters. Yeah, we've got a big 2 days coming up. I'm really excited about this. I mean, talk about proof of work. We've all worked hard to get to this point, and we've got the conference plan now for we'll be kicking off 4:30 in Columbia at Stone River. The program begins with a little opening. The treasurer's welcome. We received a very nice support letter from the treasurer yesterday acknowledging what we're doing in the emerging technology industry and how we're bringing that to the focus in at the legislative level at this point. We've working. I was able to get Chairman Herb Kirschman committed to sit in our panel discussion on economic development. Scott Snyder will be in tomorrow night. He's coming into Charleston. I'll be him up on Monday morning. We've had some excellent panel discussions in our pre-calls. Darrell Albright, and, the folks that are coming in for that panel, Gerald Gallagher and Tony Irwin. Tony's going to be testifying actually in the hearing on Tuesday afternoon, the educational hearing, and on stablecoin regulation and how Georgia is taking the lead on that. That'll be part of the panel discussion, competitiveness between the states. I had a great pre-call last night with Patrick, and we'll talk about how to go from grassroots to state level and really international focus and what that really means to South Carolina. So, the really big news is that S-163, the Senate bill that went over the House, was called up on the calendar for Tuesday morning at 10:30. So that'll be the first hearing. It was sent over to Mark Smith's committee. So we have both his bill, the Dow bill, I think it's 4766, if I recall correctly, and S-163, in the LCI committee, and everybody's starting to gear up and recognizing that they move to lead, pure and simple, and the conversation really moves us into the turning point of how do we pivot, the economic development initiative in this state, recognizing obviously the impact of data centers, a lot of education on the public side, that still obviously still needs to be done. I mean, it really is amazing some of the rhetoric that we're seeing, in the public forums, and the real fears, that are out there that have to be addressed. I mean, there's a moratorium, that was just proposed, I believe Thursday, to basically just say no data centers in the state. That's a terrible decision, but what we see going on in the Senate right now with 867 really is the constructive approach to all this. Recognize, that the externalities are the things that are creating problems at the public level. Senator Davis is attempting to address those. So citing it's not a problem making brownfields, our old textile facilities, all the locations that already have base load calculated into them, but may be stranded resources just not operating. So putting all that back into constructive use is part of an economic development plan that really pivots South Carolina, strictly from manufacturing to a technology initiative, building digital infrastructure just like we built roads, ports, inland ports. I mean, all of the physical infrastructure that's made the state so great. I really ask everybody, if you've got a list, if you want to, if you're able to, send out and send out some invitations. We do have some seats we still have to fill. My shipment of whiskey is delayed coming out of El Salvador, but fortunately, I have 3 bottles of stock here, and I've received the go-ahead from the Department of Revenue to use it as samples at this event. So everything's on go.
Well, that's the most important announcement you just made there, Dennis.
What's that?
That's the most important part of the announcement you just
Well,
made.
that's what I think also, but the food's ordered. That's all that. So, even at $50, this is a screaming deal.
Oh, God. So how many? So during the conference on March the 2nd, Monday at 4:30, you see 3 or 4 different panels. I'm not clear on how many shifts we're going to have
Yeah.
talking.
So we have Scott's keynote opening up. We have the economic development panel with Russell Tan and Bernie Maybank and
Okay.
Chairman Kirstman. And then we have Dara Albright's panel on the state competitiveness. And then the final panel is Jennifer's panel with Matt Hum and Frank Spicer, Ryan Henry, and Patrick. Excuse me, Patrick. Don't mean to forget you. That's my names. So
Okay.
it's going to be a great event.
Yeah, sounds
very-
awesome. I'm looking forward to it.
Yeah,
And I hope everybody can, if you're around, can come to it and participate in it. So thank you so much, Dennis.
When does the
Al,
meeting actually start?
T-shirts at the hearings. Okay, I mean we've got T-shirt and hat packages for everybody. AFP is sponsoring our T-shirt, and it's all about how the DMV, we'll basically sell our information to anybody with a checkbook, pure and simple. So, we want the messaging loud and clear that privacy is a big issue in South Carolina, whether it's transactions, whether it's our data, and what that really means in the long run for really to be competitive and be the most trusted state in the country. I mean, we see what's happened with Doge SC and what's happening with with the jury selection process. It's and really, I mean, big government is being called out now, and I think we're at really at an inflection point in South Carolina. We've got really 2 or 3 years, I think, really to pivot, and
right.
part of it.
Well, we'll find out Monday night. I think that's going to be an interesting conference, and I thank you for putting it together. It's a lot of hard work.
Dennis, one.
And anybody else?
What did you mean about the jury process?
Sorry?
What did you mean about the jury process?
Well, the way that they select judges.
Oh,
okay.
Yeah.
Did you?
And they're calling out now.
Well, not jury. Okay.
They're calling out the Department of Transportation, and that whole process now, and we paid lots of taxes, but we still got the worst roads in the country.
But we have a better malfunction junction now.
Right.
All right. Well, listen, we're going to move to just one other subject before we get into the debt clock, or the U.S. debt. I saw a piece on, we've talked to John Wingate with Bank Social about credit unions and stablecoins, and I didn't see much traction going on with that. But then I saw this article on a major player that's already involved with different sort of products in the credit union space, and they are bringing forth a stable coin to, I guess, to allow different credit unions to participate in their stable coin. I think that's what was going on with it, but I got my expert to look at it, and that was Keith Wilcox, and he's gonna give us a little bit of an insight into what this is all about and where the stablecoin conversation is in the credit union space. And so, Keith, it's all you, buddy, and then we're gonna hit another part of the meeting in a minute. So take it away, Keith.
Okay, thank you, George. And I'll try to be brief on this, but I've been in the credit union, the one I'm at, for 14 years, been in banking for about 30 years. So if you're not in the credit union industry, you may have never heard of TrueStage, but in terms of vendors, they're the 800-pound gorilla with regards to the services they offer to credit unions. And one of the article I read on this was that they serve 93% of credit unions in the nation in some form or fashion, and that equates to about 4,300 institutions controlling about $2 trillion in assets. So I told George I've been a crypto enthusiast since 2019, and but there was nobody I could talk to about it around here, and somebody told me about George's meetings on Friday, and that's kind of how I got involved in this. But I can tell you that in my interactions in South Carolina and North Carolina with the league and other credit unions, that there's very few people in our space right now who care or know what a stable coin is. So with that being said, Bank Social and John Wingate probably promote it more so than anybody I've seen, particularly through like LinkedIn and things like that. And they already have their own stable coin. So just what I would think TrueStage does coming into this is bring some awareness to it, and maybe some legitimacy, that people will start paying attention. I
Interesting.
still have not really understood exactly how we will use it once it comes about. One of the articles said that what this would do for credit unions is provide faster inter-credit union settlements and disbursements, accelerated loan funding and loan participation settlements, low P2P fees and merchant payments, and lower friction for cross-border payments, which is helpful for military personnel. So again, I don't know how this moves things forward, but TrueStage entering does bring more notification to it, that I guess people will start paying more attention now. I was curious how they're going about that. They're partnering with Block Time Financial. I've never heard of them. And I looked to see who their blockchain they were using was, and there was no information at all on that. I don't know if they have a proprietary blockchain I've never heard of, but for instance, Bank Social uses the Hedera hash graph chain for their products, their wallet, and their stable coin. And like most stable coins says, it'll be fully backed one-to-one with cash reserves and issued by a TrueStage affiliate related AM Best company, which I assume is their insurance company. We do business with TrueStage. They provide our insurance and our bond, and we do some ancillary loan products with them. They offer some fintech products too, which I assume this will kind of come through that. But that's the extent of what I've been able to figure out about it, George.
That's great. That's great. I think it does. I mean, we're in this talking this thing all the time, so we kind of are comfortable with discussing it. But the people that don't know what the landscape looks like, it is amazing that they've stuck in their
They're
space of
oblivious.
what they're used to, what they're comfortable with, and that's just typical of me and everybody else. But I did want to make a quick mention of how this might impact credit cards. And that article, the 2028 Global Intelligence Crisis, refers a little bit about how the merchant fees that they are paying to the credit card companies for the use of those credit cards will start to go away and basically evaporate. And those also fund the point system that airlines and others use to incentivize you to use their particular card. So it's kind of an interesting article and relates to that. And stablecoins plays a role in that transaction chain that is getting ready to change the landscape that we live in. And the thing is, it's only 2 years. That's the thing that's crazy. But there's a rebuttal article on it, so you got to look at both sides of it. But anyway,
That a
so
banker, I'm sure, wrote. Yeah. But
might
can I
have.
share? Can I share? I Googled the top stablecoin issuers for 2026, and they're all private. Tether, Circle, PayPal, Paxos, Maker, Gao, I guess, Athena Labs, Binance, Gemini, and then it did mention JP Morgan.
Circle's
Interesting.
publicly traded.
Say it again, Patrick.
Circle is publicly traded.
Yes. That's the one that they came out at like $30 and it went up in like 2 weeks to
Priced at
130.
35, and I think it got to a high of 250.
Yeah, that's amazing.
But it's way back down now.
Oh yeah. Um, all right, well, cool. Well, we got a few more minutes and not a lot of time, but maybe enough to make a little segment that we want to craft around the discussion about the debt, about how we're kind of into it, and then um, uh, and I'm looking at the time. It's like 10:15.
Yeah,
I
10,
don't, I don't,
15.
I don't know if 15 minutes is worthy of the conversation. I'm thinking maybe we just shift over to it to next week. But let's get started anyway, and we'll see how we get. So like I said, we're gonna record this. It's being recorded, and we're going to set it up so that maybe becomes a segment that we can put out on for people to see a little bit about what's going on in the debt market. And we're going to start out with talking about how we got to be the reserve currency, and then we're going to shift into some ideas about how to get us out of debt, and then we're going to talk to a few specific, rather than generalities. We maybe talk about some specifics, and then we're going to close this conversation down, maybe extend it on to the following week. But what I wanted to do right quickly was start the conversation with a snapshot of what the debt clock says our debt is at the moment right now that we're talking. And then what I want to do is see what it is at the end of this conversation and how much money we spent while we've been shooting all the breeze here. And Les, I believe, is going to be our technician to track the debt clock as we speak. But just out of curiosity, would anybody like to take a guess at how much money the debt clock is going to go up by while we're talking for about 10 to 15 minutes? Anybody want to take a guess? How many millions of dollars do you think it'll be?
100?
100
I was
million.
gonna say at least 100 million.
All right, 100 million. That's Patty and Jordan. All right, I'm saying 12 to 15 million.
Oh.
Um,
I'll go Price is Right and say 10 million.
Okay. All right. So we'll see what we end up with. Should be kind of interesting. So, let me say, I'm going to read a couple of things. So, and I want to give some credit to a number of articles written on the debt by a Cato Institute economist um, called, her name is Romina Boccia, Boccia, and Romina, Romina. She came to Columbia about 2 months ago to the Columbia Economic Club and spoke about her solution for the debt. And she's written a number of articles about it. So when we get to a little bit further into the conversation, we'll refer to her and her work. And she also has it published on a website, Debt Dispatch. It's actually a Substack, Debt Dispatch. So for what it's worth, she's a very well thought out pieces, has a lot of data behind it, and so she does a great job. And maybe I've asked her to come on the call, but crypto is not really her wheelhouse, but the debt sure is. So I'm going to just start out real quickly. This is a little thing I wrote, or I'm sorry. Anyway, I
Just
found.
say it. We don't need an outline. Just go for it.
I know it. Thank you. So, established in 1913, the Federal Reserve stewarded the U.S. economy through two world wars. Subsequently, the 1944 Bretton Woods Agreement defined the architecture of post-war global finance, and the U.S. dollar was set as the world's reserve currency. But to provide liquidity for the global transactions, the U.S. had to maintain a trade deficit, which at that time was an accepted structural characteristic of the system. The accumulating obligation was manageable until trade imbalances and foreign gold outflows forced President Nixon to decouple the dollar from gold. This shift transitioned the U.S. to a fiat currency, unrestrained by gold standard, and the national debt surged, compounded by entrenched mandatory spending, costly military interventions in the Middle East, and unprecedented COVID-19 stimulus. The total national debt now has ballooned to a staggering, I think, $38 trillion. Today, the critical economic question is how can the United States effectively monetize and ultimately reduce this historical financial burden. And we sort of, I hope Les has started our debt clock. So anyway, that's
Yes, I
that's kind
have.
of how we got to where we are today. And we threw that out in a little thread of text conversations, and we had a lot of ideas and a lot of conversations on it. And does somebody want to maybe talk about some of the things? I know balanced budget was one of the solutions. And I was like, okay,
Won't ever happen.
Nope.
yeah, I don't know.
Okay. We'll just do short-term patches. Well, can you go back to exactly what you said? There was an agreement that we have to carry a trade deficit.
Yes, the
That is,
architecture of that was that we had to provide global liquidity. So we
Mhm.
had to maintain a trade deficit. And that was an accepted structural characteristic of the system at the time.
Mhm.
So we had to put the money into the global trade so that
We're throwing dollars out. Is that the answer?
yeah,
Is what you're
yeah,
saying?
that's a good way to put it.
Yeah, but that leaves a lot out of the story. All currencies are
Well,
fiat by
yeah,
definition,
and
right? So
yeah,
nothing changed at Bretton Woods in relation to the dollar and gold. Gold was set at like $40 an ounce from FDR all the way to Bretton Woods, and it never changed for the federal government. Like that's how they priced the gold. The reason why we needed to be the reserve currency is because we took all the gold from Europe, which was bankrupt after the Great War, which happened in two parts, with part three
wait a
coming
minute. They
soon.
sent it over for us to hold.
Yeah, they physically sent yeah, they sent it over here because they bankrupted themselves in these huge conflicts, right? And we forgave a lot of the debt, and we had to, or they would all be dead. So like these are all super important things to point out, and the problem is that people see big numbers and they panic, but and I don't know the answers. I'm not saying we shouldn't panic. What I'm saying is you have to look at debt in terms of things like GDP and in terms of things like total value. And no one ever does that. That's the conversation that people need to have, because maybe the debt's perfectly reasonable, right? Like most of us, I assume, have had mortgages that were perfectly reasonable, maybe also a few
Sure.
unreasonable mortgages. But if you have the income coming in, the fact that you're paying interest is not important. Like when I bought my beautiful convertible Beamer, I invested the money to buy the car in the stock market because that money made 18% and my loan was 3. So I think that was a good deal. And so the
Yeah.
fact that I had a car loan at the time really didn't mean anything other than Mark's making more money. So you can't look at a number at debt and determine anything at all. It's just not enough information to make any kind of determination. So you have to look at what's actually going on, and you have to know why the debt happened and whether or not it's worthwhile. And we could have the argument about whether or not we should let Europe burn in the next war that it's about to have,
Yeah.
or what. But you know, they've tried to change the currency from the dollar several times. It doesn't work because all the consumers are here in terms of people that are willing to buy the crazy stuff that we're willing to buy. So it's very hard to say if how out of balance our debt is. No one ever looks at the debt to GDP ratio of other countries. right? And says, well, is the US high or low in relation to that? Like there's all this information that's
I think
actually
we've
missing.
got a debt ratio on the debt clock. Let me just look at that for a quick second.
Yeah, and then
Then
you
I
have to
want to
do it
put
for
out
all
a
the
couple.
other,
I think
for every other place.
I think it's
Japan,
on there.
Japan is the highest. They're the worst out of balance to their GDP.
That
Yeah.
makes sense because they followed us, only did it better.
So let me let me
At
just
some
throw out a
point.
couple of things
What
why
about
this
China?
is important. Unless did somebody else want to chime in? Okay, let me. So the Congressional Budget Office predicts that or shows that the way we're borrowing and spending by 2036, which is 10 years, the cost of interest on the debt, Social Security, Medicare, and Medicaid will consume 100% of the federal revenue, which is, I think, unacceptable. And
Yeah,
the
but that can be solved easily, George. Like we could go back to stop letting the government do welfare for individuals, basically, right? And get them out
yeah,
of
we got
that
to
business
remember that the
entirely.
politics have to come in
Right.
play here too,
Well,
but that's
well,
okay.
or you could go back to letting the government do it, but getting the feds out of it. Like we got the feds out
There
of
you go.
education. That was good, right? You could just put the burden back on the states where it was not too long ago. Like this is a new problem that we're spending all of this extra money. The latest thing they did was healthcare. Right now, all the healthcare money is being laundered through the federal government, where they turn dollars into quarters. What a wonderful strategy. Let's take every
Yeah.
dollar spent, turn it into a quarter of value. Like, so that's easy to fix. We could just stop giving the states federal money for things that the states need to do on their own.
Well, I think that the uh, not stopgap, but the realization is coming up in 2032 when there's an automatic reduction in Social Security and Medicare hospital insurance benefits will automatically be cut by 20%. So there's going to start to be a conversation about this, and I just thought that we needed to sort of highlight a couple of things. And you've made some good points. Stop funding the craziness.
Yeah,
But again,
stop funding welfare. All these welfare things used to be done differently, right? Like,
so we've identified that Social Security and medical expenses, Medicaid, Medicare, are the two major untouchables at this point in time. But Romina Bochia has offered a solution, and she calls it the just like the military base realignment project that was done a number of years ago. The base realignment is called BRAC. And what that happened was that the legislators Congress could not decide how to cut the military bases that needed to be cut. So they authorized a commission to go in and find those and bring it to them and let them say, okay. And so they took the gloves off, so to speak, or gave it to someone else, shifted the responsibility, and she's advocated for that solution as a possible solution to helping us get the politics out of the
George,
problem.
oh my goodness. Okay, so I was at the State House when all that was going on, and they put Shaw Air Force Base in McIntyre on the cutting block, and that was a political process to keep them here. They're still here, and it was like, Miss Pierce, type up this letter.
Yeah,
We've got to call these people. So
yeah.
it was total politics to keep. It's not going to take the politics out of it. And thank God for South Carolina that we have Fort Jackson and we have McIntyre and we have Shaw Air Force Base and what's down in Beaufort,
But
because it
didn't we
really
lose?
contributes to our state economy.
I understand that, but did we not lose the
Entirely.
naval base and Myrtle Beach had an Air Force base or something like that? I can't remember exactly what the different things,
Yeah, I'm sure, but
But it was
that's
very
saves
the
the
thing.
whole economy of Charleston.
Everybody wants to cut and nobody wants to cut the things that benefit them. But the
Exactly.
bottom line is, you know, and what's going to happen anyway, because AI is already doing it, is the tech industry is going to get hamstrung. And the military has been propping it up for far too long. And there's far too many companies taking basically being funded through the military, but they're taking military dollars and overpaying a bunch of what I would call incompetent people to be in tech. And that's not great either. Like, but AI is fixing some of that, but not all of it. Like, I would prefer that we just ditch the spending, altogether on propping up that end of the economy. Just like they tried to prop up healthcare. That wasn't the real goal, but whatever. That's the goal they said, right? We shouldn't be doing that at the federal level.
Now, it's been 15 minutes if you want to do the clock.
Yeah, let's go ahead and stop
Delta.
the conversation for now. We will continue the conversation, but let's stop the clock and let's see how much money we spent while we've been talking about the debt clock, and then we're going to sign off. And unless somebody else wants to throw it,
I want to say something because now I realize the article you sent me was written by that lady.
yes,
That was so frustrating. So you want me to share with the group what her big solution was on Social Security?
yes. But if
Okay,
Les
go
wants,
ahead.
let me
After
ask
the
Les
debt
if he
clock.
stopped the clock or if you continued the clock.
Yes,
Les.
I have stopped the clock. I started it at 10:15 and I stopped it at 10:30, and I'm doing the math right now.
Okay, we'll see how much money we spent. Patty has a solution that Romina has proffered, and it pissed her off.
It sure did. Okay, Patty's solution is more people need to go to work and pay into Social Security. That's Patty's solution. Now, her solution is to reduce the distribution to the wealthiest retirees to preserve the fund for future generations or to continue to pay out what we have. But that's what.
Okay, so she wants to cheat me out of my money that I paid in all those years.
That's exactly my point. I was like, so we're going to continue to pay at full capacity right now, but then when it comes our time to actually benefit from what we paid in, she wants to reduce it. Yeah, I don't think that's a good solution.
If you do well, you get penalized.
It's tax the wealthy, though. It's also tax the wealthy, and everybody loves tax the wealthy until they're the wealthy. Yeah.
Mm-hmm.
Exactly.
Okay, so the easy math here is that between 10:15 and 10:30, the debt clock went up $44,935,445.
Wow.
Oh Lord.
Who won the Price is Right?
So if we're doing Price is Right rules, I think I won, right? Because Georgie said 50.
I said 12 to 15 million.
Oh, then you win.
He was at 15.
But oh my word. Okay. Well, thank y'all.
Listen, I guess you can start paying it down since you won, George.
In 15 minutes, 44 million is a lot. Wow.
Yeah.
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 All right, y'all.
A lot for us.
Let's
yeah.
Y'all have a great weekend. We've got I think it's going to be finally pretty on Sunday, so we'll have a good time. And let's get together and finish up. Maybe we've got a couple ideas by the time we get together next week. So let's get out of here and everybody have a great weekend.
All right, y'all have a good week.
Thanks, George.
Thank you.
Yeah.